Hello everyone, welcome to the Stock Trading Tutor channel. If you'd like to create a free Demat account with Alice Blue, click the link in the description and fill out your details. You'll also get intraday recommendation calls and you can learn robo trading software for free. Now let's look at government securities. So what is a government security? This is a bond issued by a government authority with the promise of repayment upon maturity. Government securities such as savings bond, treasury bills, and notes also promise periodic coupon or interest payments. These securities are considered low risk since they are backed by the taxing power of the government. Government securities are sovereign debt obligations of the Government of India, either central or any other authority of the government. They include central government and state government securities, treasury bills, and government guaranteed bonds. The terms of government securities range from 2 to 30 years. Coupon or interest offered on government securities are either predetermined by the RBI, that is the Reserve Bank of India, or arrived through competitive bidding or auction process. Coupons which are fixed, paid out semi-annually to the holder of the security. So let's look at some of its features. So government securities are issued at face value. There's no default risk as the securities carry sovereign guarantee. There is sufficient liquidity as the investor can sell the security in the secondary market. Interest payment on a half-yearly basis on the face value. There will be no tax deducted at the source, and these can be held in Demat form. The rate of interest and tenure of the security is fixed at the time of issuance and is not subject to change unless intrinsic to the securities like FRBs. These government securities can be redeemed at face value on maturity, and the maturity ranges from 2 to 30 years. These securities qualify as SLR investments. So, let's look at who all participate in government securities. Primarily, they are commercial banks, provident funds and insurance companies, and primary dealers. The issuers of the government securities are central bank, state bank, semi-government authorities like municipalities. Then there's the IDBI, IFCI, NABARD, and housing boards and such. Now let's look at the denomination of government securities. Central government securities start from a minimum of 10,000 rupees and the trading takes place in multiples of 5 crores. State government securities have start from a minimum of 1,000 rupees and the trading takes place in multiples of 15 crore rupees. For government bonds, the minimum is 5,000 rupees and the trading takes place in its multiples. So let's look at some of the risk associated with government securities. First is the interest rate risk or the market risk. Changing market interest rates will affect a security's price and this is called the interest rate risk. The market price of a security varies inversely with the equivalent market interest rates. For instance, if the interest rate increases, market price of the security will decrease and vice versa. If the holder sells the security before it matures, while the prevailing market interest rates are higher than the security's coupon rate, the holder will get less than the face value. Next is the default risk. Default risk is the risk that an issuer of a security might default the repayment of the principal and/or interest in the timely manner. But government debt securities are free of default risk as the securities carry the sovereign guarantee. On the other hand, government debt securities tend to have a lower return than corporate debt securities, which carry higher risk and thus offer higher return to attract investors. Now let's look at some of the benefits of government securities. There is greater safety and lower volatility compared to corporate bonds and other investments. The transparency in transactions and simplified settlement procedures are through CSDL and NSDL. The variations possible in the structure of instruments like T-bills or treasury bills are partly paid-up bonds. Index-linked bonds and other securities with call and put options are the products available. Higher leverage will be available in the case of borrowings against government securities, and there is no tax deducted at source on interest payments, and there is greater diversification opportunities with government securities. Thank you for watching this video. For more videos on stock market and trading, please subscribe to this channel. If you'd like to create a free Demat account with Alice Blue, Click the link in the description and fill out your details. You'll also get intraday recommendation calls and you can learn robot trading software for free.